All right, let's talk about your savings. Today, we're going to zoom out and take a global look at how you can protect and even grow your wealth. We'll be diving into a really key tool for this, the foreign currency fixed deposit. So, let's get right into it. Here's a quick roadmap for our chat. First up, we're going to uncover a risk to your savings you might not even know exists. Then, we'll look at the two heavyweights, the US dollar and the euro. After that, we'll get into the practical, smart tactics for managing these things. And finally, we'll see how this all fits together as a financial safety net for you. So let's kick things off with Section 1, the hidden risk to your savings. This is all about why looking beyond just your local currency is so crucial if you want to preserve your wealth for the long haul. Let me just ask you this, and I want you to really think about it. All that money you've worked so hard for, just sitting there in one currency, is it actually as safe as you think it is? Well, the honest truth is, keeping all your eggs in one currency basket is pretty risky. You've got things like inflation and depreciation, that's when your currency's value just kind of drops, and they act like silent thieves, just slowly eating away at your money's buying power. You might not feel it day to day, but believe me, over the years, the impact can be huge. So what do you do about it? Well, this is where something called a foreign currency fixed deposit comes into play. Think of it as a strategy that lets you do two really important things at once. You can earn stable, sometimes even higher interest, and you spread your risk out. You're no longer just tied to the fate of a single currency. It's really about playing both offense and defense with your savings. Okay, so that brings us to Section 2, USD versus Euro. These are your core choices. If you're going to diversify your savings, these two currencies are pretty much the two pillars of any global strategy. So let's break down their different roles. You've got the US dollar, which is the world's #1 reserve currency. It's the safe haven everyone flocks to when things get a little chaotic. Then you have the euro, the powerful #2, and it's a fantastic way to balance out all that dollar reliance. And of course, their values are driven by different forces, the US Federal Reserve on one side and the European Central Bank on the other. So why the US dollar? Well, for one, its stability and liquidity are just unmatched. You can exchange it easily pretty much anywhere on the planet. Also, depending on what the US Fed is doing, holding dollars can actually earn you a better return. And probably most important, it's that go-to defensive asset. When global markets get shaky, the dollar often gets stronger. And what about the euro? Well, its role is really to complement the dollar. It helps you avoid being too exposed to just the US economy. Plus, if Europe's economy is on the upswing, the euro is a great way to be a part of that growth. Holding both can actually make your overall savings a lot less volatile. It just smooths things out. Okay, time for Section 3, Smart Tactics. This is the practical stuff. We've covered the what and the why, so now let's get into the how you actually manage this kind of investment smartly. One of your first big decisions is about timing. You can go for short-term deposits, we're talking a few months, and that gives you a ton of flexibility if you might need that cash soon. Or you can go long-term, which is more of a strategic play. It lets you lock in a really good interest rate for a year or even longer, securing a nice, stable return. Which one's right for you? It really just depends on your own financial goals. But, every investment has a catch, right? There are always risks. And it's super important we talk about the single biggest one you're going to face with this strategy. And here it is, the exchange rate. It can be a real game changer. For instance, look at this. You might earn a solid 3% in interest, and you're thinking, great, I'm winning. But what if, during that time, your home currency gets stronger by 4% against the one you're holding? Well, you've actually lost 1% overall. That exchange rate loss completely wiped out your gain and then some. It just goes to show you, the interest rate is only half the story. So how in the world do you manage that risk? Well, one really smart way is a strategy called batch currency exchange. Instead of dumping all your money in at once, you break it up. You divide your cash and exchange smaller amounts over time. What this does is it averages out your exchange cost. It protects you from the bad luck of converting everything on one terrible day. It's a simple but really powerful way to smooth out the ride. And that leads us perfectly into our final section, number 4, building your financial safety net. This is where we start thinking bigger. It's not just about earning a few extra interest points. It's about building genuine, long-term financial security. I really like this idea of a financial fortress, because that's what this is. Holding strong currencies like the dollar or the euro isn't just an offensive move to make money, it's a defensive one. It's a key part of making your entire financial life more resilient, more of a fortress. So what does this fortress actually protect you from? Well, for starters, it gives you way more resilience against global inflation. It acts as a shield during times of geopolitical chaos. It gives you real international purchasing power for things like travel or education. And it creates a ton of flexibility if you ever need to move capital across borders. This right here is the true strategic advantage. This quote just nails it. A foreign currency deposit isn't just another tool in your financial toolbox. It's a fundamental strategy for preserving your wealth, and it forces you to adopt a much more global perspective on your own finances. So I'll leave you with this final thought. Take a hard look at your own savings. Is everything just sitting in one currency in one country exposed to one single set of risks? Or have you started to build that financial fortress? Does your asset allocation, does it truly have a global perspective? Thanks for joining us.